Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analysis Update for the 16th of June 2011. Hi, everybody. We're just going to look at the 4 Majors, starting with the Euro against US dollar on our CTC strategy template. A lot of movement yesterday, guys. Yes. There was a hell of a lot of movement yesterday on the pairs. As you can see, huge bearish candles. I mean, we're talking 200 pips and still counting from previous highs. You can notice the breakout. I mentioned the channel. That was the first part. Then we had an all-time high, and then we saw price revert to the downside, and then a failure. We thought we were going to see a bit of hesitation here. We thought we were going to see a bit of a bottom out at one stage. Price had found support on a previous support and resistance level. You can see a resistance, support, and support, and we thought, well, we could see a bounce back up to the upside. Then we had an indecision candle, and then we saw price yesterday start its down move. Obviously, opening lower, then closing lower, then just tumbling. And if you take a fib projection from where we've come from, so this is where the candle started. That's the candle where we saw the consolidation, and that's where it finished. You notice now that this move here is 100% of the initial move, the first start of the move. And then we have 161 roughly down towards the 200 period moving average, 261.8 down here at 135.55, 1355. So we're going to see a bit of consolidation around this area here, because we've seen a full extension of the candle, or of this move. We could see a consolidation around the band, around this area here at 14.1286, before we see a second extension to the downside. So just make a mention of that, 14.1286, 14.1286. Let's get that penciled in. 14.1286. .96, but I shall be able to work on that. There we go. So that is the 100% move of the initial start. So if you look at it, that's a start, that's a pullback, and that's a continuation from that initial move. And we've now gone 100% of that move. So are we going to see a bit of consolidation? If it consolidates to the underside of this line here, then we could see this is just a consolidation before we see a further extension to the downside. Notice that the movement is, if you look at it, the trend line at the moment now, all moving, the moving averages are all above price, and you can see it's quite a steep move to the downside. A lot of momentum to the downside after the initial move, the breakout. You can see yesterday the major trend, and then we had a pullback. This was a support area. You can see clearly the breakout after it hit the trend, breakout, consolidation, and then the continuation to the downside. This is an ID chart, guys, so it gives you an idea of how to put it all together. Swing highs on a major trend line, failure to go higher. That area there was roughly around support and resistance, prior support and resistance, support, resistance, resistance again with a shooting star formation after a number of hourly candles going sideways, evening star pattern, candlestick pattern, and then we've seen price revert to the downside, and now we're trading below the extension low, so possibly a bit of a consolidation before we see a second run happening. So just be aware of that. We want to see price falling lower. We've got to see price failing to break higher than this area here, and then we could look at the 161.8 fib extension as our next possible target. So let's have a look at our 30 minutes. You can see the consolidation over the US session last night before the US session closed. And then during the Asian market open, and then at 5 a.m. GMT this morning, we saw price failing to break higher than a previous consolidation. You know, before we went into this range here, we consolidated. There we go. Just draw the box. Failed to break higher than the previous swing here at 14,200, and then we've seen a break high, lower. So now moving average all evenly spaced to the downside. You can see the spacings, which indicated a very strong negative move in this case, and now we're trending below this level. You just got to keep in mind that as long as this stays below the 14,128 mark, then we could see possible moves lower. 128, thereabouts. So you can see the consolidation under this range here. So as long as it stays below that, then we could see possible further continuations, because we're now trading at 100% fib. We could see consolidation in this area now because of that. So keep that in mind, guys. Price has got to stay below this range. It can't go. It can't trade. Well, let's put it this way. This is the first port here. It's got to try and close below this during the end of today. If it's closing lower than this today, then we obviously can see continuation to the downside. The last port of call for it to pull back and must stay below is the prior support area for the breakout. That's here at 1600. Can stay below that, and then we're seeing just a consolidation. We could see a bit of a poke ahead above the line if you look on a daily, this level here, before we see continuation to the downside. There you guys. Okay, the next up is the sterling against US dollar. Good old cable against US dollar. Let's have a look at the daily. Here again, like its counterpart. This one, yeah, stuck out like a sore thumb. And I did mention it on my analysis. We had the uptrend. And you could see that price pretty much moving to the upside. However, on our intraday time frames yesterday, I did mention that what we saw was an evening star formation, that exhaustion candle coming on a previous intermediate downtrend. So it needed to do a hell of a lot more to break this conviction here of further seeing selling happening, and sure enough the candle had started, and because we saw an exhaustion candle at a resistance level, intermediate resistance level, swing low, swing low, swing low is the outcome of this, and that's what happened. A full move right down to the to the major support level, and you can see that the price is now trading on the underside of that at 16,200, and we're moving lower. So intraday we know that the 16,200 was the major uptrend level, so let's pencil that in. There we go. So you can see the hesitation, the breakout, consolidation, and now we're seeing a second move to the downside. 1600, 2200, you can see quite clearly the previous support, breakout, consolidation, right to the underside of that, and the continuation to the downside. So that's more like the major strong support and resistance area, and now we can see what we are seeing is the continuation of that pullback. So where to for this pair? Well, you can see it's trading below all the moving averages, and the CTC is well extended to the downside. And you'll notice that the 30-minute chart, you can see the extension lower. That was the breakout of the trend, the major trend, major uptrend. You can see price support, breakout, pullback, and continuation. Now the continuation is going to be, we're looking at possible here on the daily. We've been here before. Price swing here on this move here at roughly the 1100 mark as a possibility. So the 1200 mark, apologies. Ultimately, our next target would be down here at 1600. Why? Because we've had a lot of support and resistance in the past year. This was a major support area for this pair over a number of months. There we go, you can see it quite clearly if I just zoom out. You can notice here a lot of resistance back in early part of January, then a breakout, consolidating once, twice, 3 times over a period of 3 months. We saw a strong support shift and then a bounce higher, and now we are back looking at potentially seeing this retested in the near future. So price has to stay below the 16,200 mark in this case for us to see any further downside movement for this pair. But as it stands now, it's looking very, very negative for this pair. So long term, we should be looking for shorting opportunities and nothing but shorting opportunities. Next up is US dollar against Swiss franc. Let's have a look at the daily. You'll notice that the US dollar gaining strength against the Swiss franc, breaking a prior support resistance level here, just about the 34.50 mark. Then trading well up and testing now the prior support and resistance level, the major one, support here in the past back in early May, and breakout consolidation, and this was a resistance level now, ongoing long term, and that level roughly on the highs here at the 85.45 area. So let's pencil that in. Notice it's trading above the 20 period moving average on a small time frame. So let's pencil that in on our small time frames. $45 mark. There we go. So you can see it's the major resistance level. You can see there 2 shooting star formation, another shooting star formation. This all at a resistance level. A major resistance level here at 84.40. And the 45 is the wicks. So if you choose the wicks there, it's a lot. You can see the upside movement on this pair. Huge candle, 7 o'clock hourly, a lot of negative. See, it's pulling back. Just remember, the reason why I'm talking about this is primarily this morning we have a lot of news out for the Swiss franc. We have the LIBOR rate, which they expect an unchanged figure of 0.25%. Then we have the monetary policy assessment, the SNB, and then the press conference on the back of that. And then this is all coming out at 8:30 a.m. GMT as we stand. So we have the monetary policy assessment at 8:30, then the press conference for the SNB financial stability report at the same time. So it'll be interesting to see how that's taken in. But I think as we keep continuing to see the negative news coming out of the States as well as the rest of Europe, I think everybody's just going to jump on the Swiss franc, to be honest. I don't know. I mean, we saw the US dollar rally yesterday. That was even after that really bad news on its figures yesterday included. I think everybody's pretty much more worried about what's happening in Europe overall than what's happening in the US for some strange reason. But as it stands now, you can see the price is still pretty much to the upside. And so what we do is we're trading what it's showing us on our charts, and our charts are we're looking at a potential upside movement. Notice this is the major trend on the daily chart. I'll just put that in, and you can see that we've pulled back after a significant support area at the 8400 mark. So our next target, possibly if we can break higher, punch higher than the high, the 84.4900 mark, then it would definitely be the trend line. We've done in the past, the major trend has been keeping this in check, and we're going to be using that as our next possible target over here. So roughly around the 8600 mark would be a good call for this. So the prior swing in this case. So yeah, let's use that as a possible target intraday. But first and foremost, it needs to break above that consolidation area that we're seeing right now. But this is happening on a prior support or resistance. And if we can break and close higher than that, then obviously you could just see a smidgen of my 200 period moving average just above us there, but 8600 would be our next target for this pair before we see the major trend line on the daily being retested again. So if we see a failure to trade higher than these candles here, then we're just going to see price fall over, and then we could see consolidation occurring to the downside. So my thoughts this morning is not to trade anything for the next at least hour and a half or so, just to see what the Swiss franc does, because you're going to find there's a lot of volatility will creep in prior to the news. You can see that we've seen one or two wicks. These are the all-time high, but you're seeing these shooting star formations around a prior resistance level, and there was a consolidation band. You can see that. And we've seen a down candle, and we're seeing up movement again. So this is where the volatility kicks in now. The speculators try and speculate what the news is likely to be, and this is where a lot of people get caught out. But you can see the uptrend in play as we speak, and ideally we don't want to be looking for trades until such time as the markets actually decipher what exactly is that the news is, and how the large makers, the big spenders out there, are taking it in, and how they're going to use that news in their trading. And once they've done that, then we want to trade with the momentum. So don't trade, I don't think, for the next hour and a half at least. Wait until 9 o'clock, until such time as the news come out and it's fed through everybody. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily time frame for this pair. You notice that we had a nice bounce to the upside on this. Price fell to the fall low, and well, it closed lower, but we had a massive bullish engulfing pattern at this level here, and then we had 2 days of indecision before we saw a decision, and that was pretty much what we're seeing now in play. So we have a support area, and then we have a swing high, so we know that price movement is now to the upside. The trend line, the new trend, the intermediate trend, we put it that way because we know that the major trend is down. You can see price is moving to the downside by that intervention candle that we saw. You can see the majority of the wicks and everything is to the downside, so the major trend is negative. I repeat that, the major trend is negative, and we need to be trading well above 50 to be even tempting to see the 8200, which is the previous area of resistance. So if price, you can see price is pulling back on the Asian market and European session open. If we could see price staying above the previous swing here, in this case, notice here there's a previous swing here and support here. If price can stay above this area, above the 20 period moving average in this case, so let's just say roughly around the 80.75 mark, we could see a potential breakout, pullback, continuation in the direction of the trend. We could see a bit of consolidation here before we see a kick on to the upside, but as long as price can be trading above the 80.70, 80.75 mark, then we're looking for further extensions. On the 200 period moving average, you can see price is now trading just below that mark there. It's a 200 period moving average. Prior resistance, the breakout. Are we going to see consolidation above here? Price pull down, and then we're going to see a long wick to the upside, something similar to this. We'd like to see a hammer above this area here before we see a kick onwards. Swing high, swing high. Now we're seeing consolidation. I did mention that above 80.75, you can see that's where it is now. So if you can stay above here, but ideally close higher than the 200 period moving average on the 4-hour time frame, that will just confirm that price is now happy at those levels, and we're going to see a potential bounce higher. So factor that in. You can see on the 30-minute chart, for example, the CTC above us is blue, and then the trend line for this time frame is here. You can see the higher swings. We've seen the price break lower than the trend line. I did mention, however, that 80.75 or 80.70 would be ideally where price needs to stay above long term or for the daily. So end of play today, as long as we can see price trading above that level there, then we could see this is just a consolidation band, and then we're going to see a bounce higher. Failure to find support at 80.75 and close lower, then we're going to see a potential retraction and maybe a potential pullback further to the downside, in this case back to the intermediate trend line. But as long as price can stay above at least the 80.75 or 80.80, then what we're seeing is just a consolidation after a lot of momentum to the upside, and then we could see a continuation in the direction that it's going to over the next couple of days. So we have a lot of news out today, especially for the Swiss franc, and then a bit of for the euro. So, and then we have a lot of news out for the US dollar this afternoon, which would probably reflect on the Japanese yen. So we've got building permits. They're expecting a slight figure downside. They've got unemployment claims. The previous figure is 427,000. They're expecting a forecast of 421,000. So that's unemployment is going to be, they're expecting a less figure. So if it comes out slightly less than that, if it comes out at 420, 419, then it just bodes well for the US dollar. If it comes out higher than 421,000, then we're going to see negativity in the market, and we could see the Japanese yen capitalizing on that. We also have the Philly Fed Manufacturing Index later on, 3 p.m. GMT this afternoon. So there's a lot of news out this afternoon for the US dollar. Just be aware of that and take that into today's trading, especially for the US dollar against the Japanese yen. Otherwise, all that remains to say is hope you have a fantastic trading day. Make sure that you follow the rules of the CTC. Make sure your money management rules also complement the strategies that you're using. Don't ever trade with an adverse risk reward. And most importantly, trade serenely.